Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics, coming to you on a Friday morning with another installment of The Best Thing I Read This Week. The best thing that I read this week was actually a blog post from Jesse Felder in the Felder Report. I recently heard Jesse speak on a podcast. I was really intrigued by what he had to say, so I went over and checked out his website and started doing some poking around and reading some of the stuff that he has written and made available to anybody who's willing to go over there and check out his site. And this week was pretty interesting because he talks about some of the speculative mania that appears to be building in the market, right? And he has some really interesting charts and tweets that he's pulled off of social media that look at the number of new accounts on platforms like Robinhood, the number of Google searches for terms such as call options and day trading, right? So those are kind of real-time sentiment indicators that, kind of non-conventional types of analysis that investors can do that I always kind of find that stuff really interesting, readily available to you by, looking at things like Google searches. And what's interesting to me is the way that the speculative fever has built. It's built in the absence of sports gambling, right? And there are, folks such as the founder of Barstool Sports now day trading and broadcasting it live as he trades. So he's given it this kind of gambling connotation, which I don't necessarily agree with. I am all for anything that brings more people to the financial markets. I am all for anything that makes it easier for people to open an account and learn about financial markets. But the key is to learn about financial markets, right? To have an understanding of what you're doing, to have an understanding of what you own, right? To me, going out and buying shares of bankrupt companies because you see them rallying, to me, that's not investing. That is pure gambling. But hey, listen, to each his own, right? If that is how you choose to do it, what I say is always manage risk, right? Risk management should be a really important part of anyone's process. And at the same time, know what you own, right? If you are owning shares of Hertz, well, know that you own a bankrupt company or a company that is filed for bankruptcy, right? If you own shares of Whiting Petroleum, just understand you own shares of a company that has filed for bankruptcy, right? A couple of months ago, there was a big scare with an oil-related product, the USO, right? Because people didn't realize that they didn't own oil by owning that product. They owned futures contracts, leveraged to oil, right? Which is something different. Not knowing what you own could get you into a lot of trouble. So, everybody should learn about the markets in a way that makes sense to them. But at the same time, I think that portraying trading or investing as gambling is actually doing a disservice to the markets. I prefer taking a disciplined, process-driven approach, whatever that means for you, right? There's a lot of ways to invest and trade, and having strict risk management tools should be a big part of that. So definitely worth going over and checking out the Felder Report. It was the most interesting thing that I read this week. Hope everybody has a great weekend, and we'll be back to you soon.